Hey guys, what's up? This is Andrew for TRENDLINES.com. So this is my last video on AMC, guys, before I go to France. So I'm moving in 3 days. I'm gonna arrive there in 1 week. So I'm not gonna be able to do any update during the weekend because I'm gonna be moving. So let's analyze everything that we had this week already. I'm only gonna miss one session and let's see what the price action is telling us. Let's get into it. Alright guys, so this is the situation. As usual guys, I start on the daily time frame to show you that we are in a huge triangle when I use the logarithmic scale, which I believe is the right one to use here because it's giving me very good reactions. As you can see here, I sometimes need to move my trend lines, but each time I found a new trend line, it's a trend line that is a strong resistance because of the multiple reactions that we have here, as you can see. So here, here, and here. So this is the level to break. It's 44. Right now, what happened, guys? We had one very bearish day yesterday. We're going to discuss it. I like what I'm seeing here. I'm going to tell you what it means to me. First thing, yes, so we were trading above the moving averages, as you can see, guys, the day before yesterday, so on the 23rd of November. And we got severely hammered. To be very honest with you, I was one of the buyers that got trapped in there. I bought around 41, something like this, because I was hoping we finally break out on the upside, but it got delayed. So what can we do? We wait. The next day, what happened? So we closed below the moving averages, as you can see here. So that's why this was unfortunately not a very good sign, but it is what it is. And the day after we started, so on Wednesday, we opened the session lower and we went close to the support area. So basically we have some support. When you are wondering where are the supports, check always the previous low. It is the first support. So here the previous low was 37.5 and this is where we had support. We have more support just below around 36, 37 on this blue trend line. So we started the day bearish and we found some support at 37.5 and we closed the day very close to the opening level, slightly lower than yesterday's close. So this is a red candle, but even being a red candle, it is still a hammer. So what is a hammer? A hammer is a candle that has a hammer shape, exactly like this, all right, a hammer. And it means that a lot of sellers have been hanged here. Just the same way when you have those long upper tails here, this one is not very long, but whenever you have some long tails, this is a doji candle, it's a reversal candle too. Here you see, for example, this is a shooting star. So it's like the hammer, but the bearish version. And the hammer is here, it can be red or green. It's strong if it's green, this one is red. But it means that a lot of sellers have been trapped in this move because they were selling during the day and we closed higher. So not higher than yesterday, but higher than the lows. And we have this long tail. So this is a reversal candle. But it cannot be used only by itself. It needs to be associated with at least one more indicator. So either, for example, a strong volume. So here, first thing, the volume is low. So this gives less power to this candle, first thing. Second thing, it needs to be confirmed by the next candle or by a short-term breakout. So here we are below the moving averages. So that's not very good. We don't have any short-term breakout. We don't have a high volume. So we have this reversal candle, but let's be honest, it's not very powerful. So let's see if on Friday, because today is Thanksgiving, if on Friday and the market is closed, we manage to close above those moving averages and have a nice green candle like here. You see a candle like that, this would be a very powerful reversal signal at that time. And it would probably mean that this time we're going to break out 44. So let's see. I don't know if we're going to have this candle. It's a 50-50 situation here. We're even slightly bearish on the short term, guys. I'm here to tell you what I really think. This is not looking perfect, but we have this nice hammer. Let's check on the 4 hours time frame. Where are the short-term resistance? So you can see here the same hammer is appearing here. It's not as perfect as on the daily time frame, but it's still a hammer, but it has not been confirmed by the next candles. And we're looking for a short-term breakout. Okay, so to find a breakout, you just connect the highs that you see and you try to find a trend line that is fitting well. Okay, here I don't have any, let's be honest. maybe around 41. So you see, you need, the best I can do is to connect the two highs that I had recently, and it gives me a level. So let's say in a few hours, it's going to be around 41. All right. So if I get back on the daily time frame, guys, and it is where we have those, so the 20 period moving average is at 40. So if we manage to close above that, basically I like to be above those 2 20 and 50 day simple moving averages. They are very helpful to know the trend. So of course, when there is no trend, the market is rangy. You can see we have many crossovers, but whenever you are above the two of them, it's usually great for the coming days. For now, we are below the two of them. That's why I want to trade back above that, and it would look better. Another thing that we want to see, guys, is some nice consolidation period. For now, we are consolidating, true, but we are not able to stay with a low volatility. We are not able to stay with low volatility for a long period. You can see we have those strong ups and downs, which makes actually this area still volatile, and we want to see this end of triangle to be smoother, just like we had here. To know that, you can use the Bollinger Band. I'm using them more and more because it's actually, I used to do that exercise of finding the consolidation visually, but you can actually have this information right away by looking at the Bollinger Bands. So you can see that here, for example, after spending 10 days roughly at the same level, they were tightening a lot. And then we had this move. So of course it was not enough, but it still was a nice setup. And you can see before the real move up, you look how tight they were. So we can compare this. So here, it was a bit the same situation, guys. Triangle, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 days basically when the market was not moving. So maybe this is what is going to happen. I don't know. Maybe it's going to be more brutal. What I'm just saying is that if we have those 10 days when the market is just steady, this would be very good for the bullish case. We would, of course, need to have the breakout on the upside to confirm the new trend starting. But it would be a very nice setup that a lot of traders would be looking at. And this is what we want. We want many traders to be looking at AMC and get into this trade for the breakout to happen. And once the breakout happens, so this would be very good, guys. So I'm still very bullish here. I still believe we're going to have a massive fifth wave. The reason behind is the unlimited flow of money that is in the market, guys. And, you know, this meme movement that started with GME and then AMC is so strong. I can feel it, you know, I'm doing those daily updates. Not maybe daily, but I'm doing those updates and I can see the comments. I can see everything around that. And I can especially see, guys, the synthetic short and the option market that is just absolutely crazy. So stay with me, guys. I know that some of you don't want to look at that, but you need to look at that. I'm going to make it very simple. We just want to see how many options we have on the 145 strike. Bam. We were at 20.4 million last time I checked, which was 2 days ago, right? So we want to see this number growing because this is what is going to make it very hard for option market makers to hedge their positions. Basically, they're going to need to buy a lot of shares on the upside. So what is it now? 20.8 million, guys. So it's growing by 500,000 every 3 days, roughly. So let's see where we are next week when I'm going to be back to France. But I'm pretty sure we're going to be above 21 million shares. Most of them are coming from Gen 22. I've already shown you that. Let's check it again. Gen 22, 300,000 equivalent shares. So this needs to be multiplied by 100, but whatever. So 33 million equivalent shares on the Gen 22 maturity. So it's by far the biggest one. I mean, DEC is big as well. December is big as well. December is very big as well. Okay, we have a lot of options as well on December. So I'm going to be paying a lot of attention to what is happening with this number of options. If we get close to expiry, are they going to get rolled or not? So right now we have 70,000 on December, 120,000 on Jan. If in December we didn't reach 145 and I see this is coming here and that here we have 200,000 options, guys, this would be very, very bullish. This would be a very good sign that I'm going to be paying attention to and that I would let you know. So what else can we say? DTC at 3.3, total short 25%. It's getting hot in here. Bam. I'm going to move it here. Let's compare quickly with what we had in the past few months. So not moving for the past month, okay? DTC around 3.5, not moving a lot. The maximum synthetic short around 20%, so not any strong move in terms of synthetic short, but the 145 strike is growing, and this is a good indicator of the bullishness that we have in this market. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. See you guys.